Hey guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, Hankotrade. With spreads as low as 0 pips and leverage up to 500x, Hankotrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using Hankotrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. Hankotrade.
Recording in progress.
Hey everybody, good evening. Thank you guys for joining. Welcome to Stock Sniper Trading. It's 9 p.m. Eastern. It is Thursday, January 18. Welcome guys. And I'm happy to be here. And today, guys, this is going to be our last Tokyo session. And next couple weeks, we're going to move over to New York. We're going to do 1 p.m. around 1 p.m. till 3:15 p.m. Eastern, right near the end of Wall Street, and we'll go into Power Hour a little bit. So guys, make note of that. The next couple weeks, we'll be doing New York sessions, and then we'll come back to Tokyo after and do a couple weeks of Tokyo. Okay, so I hope you guys enjoyed the education that we did the last 2 weeks in Tokyo. Hopefully you guys learned something. We did about 4 or 5 webinars are on YouTube. If you guys want to review those, there's some good webinars on there. There's one about mindset and psychology, more about if you're struggling as a trader. We did 20 points, key points we talked about. That's always a good webinar to go over it, and so you can improve as a trader, and they're available on YouTube. Okay guys, and so tonight's plan, yesterday we did gold and USD JPY. Tonight we're going to do gold and US oil. Okay, so hopefully you guys have your excuse me. Hopefully you guys have your charts prepared and ready to go. I will be doing a top-down analysis, and we'll talk through together as a team as to what's going on. Right now, just looking at gold, it broke out of this consolidation. There was that nice big candle that came out, then it got retraced right back into this consolidation box. Gold is a little messy right now. You can see how it is trading in here. So we'll go over our news and our analysis, then we'll get into the charts. Okay, so first thing, as always, thank you to everyone joining. I appreciate all of you guys on Zoom. Thank you, Peter, all the way from South Africa at 4 a.m. Eastern. Thank you, I appreciate that. Juanito, thank you for joining. Ben Fishing, thank you to coming again. And Jackie, 10 a.m. in Singapore. That's a nice time, 10 a.m. In Singapore. So wow. And here's 9 p.m. So look at that, 13 hour difference. So thank you, Jackie, for joining. And everyone on YouTube, appreciate you guys as well for joining. Sal, thank you for joining. Good morning. Juby, good morning. Welcome, guys. Alpha, good morning. Ferdinand, good morning. Welcome, guys. Welcome. Tester, welcome, guys. Thank you guys all for joining. Deepak, thank you for joining as well. Yeah, so guys, it's all over. We're all over the place. Look at everyone's from London. It's late for you guys, 3 in the morning for you guys. Sanam, 2 a.m. Yeah, so that's trading, guys. Trading is global. It's worldwide. It's 24 hours around the clock. Some days we're gonna trade really, really early in the morning. Some days late at night. Some days in the afternoon. That's why when we talk about pick a session that's suitable for you where you are at around the world, and it fits your lifestyle and your work schedule and everything like that. You can dedicate a couple hours in the market where you're focused and looking at the charts. And us at SST, we trade around the clock. So we do London with Shahab. I myself do New York and Tokyo. PK does post New York and some Asian sessions as well. And Dave does Wall Street right now. So we cover pretty much the entire markets every single day, 5 days a week. So we're extremely proud of that we can do that, and thank you to the team that does all that. Okay, and so guys, what we're gonna do is, number one, let's get to Forex Factory. Let's just review the news of what happened today. There was some important news in the markets. I always like to review previous day's news and look at the following next day's news. So today, what I was looking at was over here at 8:30 a.m. Eastern. Every single Thursday we have our unemployment claims. It's a USD red folder, and last week the number was 203,000. They were forecasting a little bit of an increase in unemployment numbers to 206. Look at the actual number that came out. What do you guys think about this number? 187,000. Okay, so it's less than the previous week's 203. It's less than their forecast, and it's not less than by just a couple thousand. This is a lot, 187 and 206. So what do you think this is? Is this good for the US market? Is this good for the US dollar? Is this good for the economy when we see this type of number, 187,000 of unemployment claims? I'm just speculating here, but to me, what it means is it means that there's less individuals applying for unemployment. So that's good. That's good. That's great for the US dollar. That's good for the economy. So things are improving by just looking at these unemployment claims week over week. And then also, now you can take it a little further, building permits. Building permits are going up from their forecast, 1.47 million. The actual number came out 1.50. So building permits are increasing. So that's also good. Building permits are increasing. We have less individuals applying for unemployment. More people are working. Housing starts. That's an increase from 1.43 million to 1.46 million. So housing is starting to develop. So that looks good for the economy just by looking at the numbers. When we look at the numbers, and so coming out of 8:30 a.m. for the US dollar, that looks like it's pretty positive coming out of there. And then let's go into our news tonight and tomorrow. So if you're going to trade into London with Shahab and pre-London, we've got some British retail sales month over month. So again, retail sales month over month, we're talking about previous month. So this will be December. I'm sure in the UK, you guys in December did a little bit of Christmas shopping, some holiday shopping. So maybe this is going to be a positive number, how it was in the US. I don't know. You guys in UK, do you guys do a little bit of Christmas shopping? Did you guys spend a little bit over the holidays? That's you guys. Retail sales month over month coming out of the UK. So let's all speculate. Christmas time, probably a lot of spending. Retail sales, a lot of spending. We'll see how now goes forward in January and February in the slower months. We have this World Economic Forum annual meetings all week. This is going to be day 5, 5 a.m. England Central Bank President Lagarde speaks. Then we move into 8:30, some Canadian news. We have our core retail sales month over month. Retail sales, I know I spent a little bit of money over the holidays, so I was a contributor into this retail sales. And then we move into Wall Street and 10 a.m. Then we have our preliminary University of Michigan consumer report, and that's going to be how Friday moves. It's not going to be crazy volatile, but it is a traditional Friday, so just be careful in the markets when you are trading. It could be a fake out Friday. It could be really smooth trading on Friday. All that we can do is have proper risk management when you're trading. Don't over leverage, don't over trade. Look at yourself. How have you hit your daily goals? Have you hit your weekly goals? Are you doing really well in 2024, the start for the first couple weeks, 3 weeks of this new year? Like you gotta look at all of this, and then you can judge of how much you're willing to trade tomorrow, how much you're willing to risk, all of those things. So make sure this is part of your trading plan going forward. Do I make that clear? Like, do you guys understand what I mean by this? We talk about this every single day, but are you guys actually putting it to work? Are you guys doing this? Are you guys looking at your day-to-day trading, your week-to-week trading, your month-to-month, and then you can allocate a certain amount of risk to your next day, to your next week, to your next month? If you're in drawdown, if you're having a difficult time, if you're earlier today you had a bad day, then do you want to keep compounding your losses, or maybe you had a bad week? Do you want to go into next week. So also review guys, review your trades, review. It's very, very important. I can't stress enough how many retail traders do not review their day trading. At the end of the day, they just trade, and whether they make money or they lose money, they just shut the laptop, they shut the books, and then they don't look at anything, and then they come trade the next day in the market. So that's not a good plan. That's not going to get you consistent. So make sure you guys are reviewing. That's where you're going to learn everything. I can't stress enough the importance of that. So hopefully you guys understand where I'm coming from with that and why I keep talking about it, because it is very, very, very important. So just get a journal. There's free journals available, trading journals all over the place. You can get free trading journals. You can make something very simple yourself with a spreadsheet and just put in the important information that you need and just follow through with that. Okay, and so that's our news tomorrow, and then next week, like I said, we're going to do New York, so things will be a little bit faster in New York, and so everything that we learned in Tokyo, we're going to be putting it to work in New York. Okay, and earnings tomorrow real quick. Okay, this is Earnings Whispers. That was Forex Factory. So if you're just joining us, these are all free websites. Forex Factory is free, that one that gives us all those economic folders. This one is Earnings Whispers, and then what we do is we just go to the calendar, and then we're going to select Friday. But I can even look already for next week. Look at next week, like Tuesday is a big day. 22 corporations report before market open, 21 after close. Look at Wednesday. Wednesday is a big day. 26 companies report pre-market, 46 after hours. So midweek Wednesday, I'm already planning like to look at earnings next week. But let's look at Friday. Friday we have 12 pre-market and then only one after close because it is Friday. So we got to pay attention to pre-market earnings. Is there any big corporations, companies, anything that we need to particularly pay attention to? Remember, there is option traders, there is equity traders who trade these individual securities. But if we're trading NASDAQ, if we're trading S&P, if we're trading Dow Jones, some of these corporations are comprised in those indices, so we need to know which ones to pay particular attention to. So we have SLB at 6:50 a.m. Travelers Companies. We have a lot of banks. This was banks earnings weeks. There was the big banks. There was the regionals. So we got Fifth Third Bancorp, Ali Financial. Right here, State Street. Some of you guys have probably heard of the big guys: BlackRock, State Street, Vanguard. These are the big players. Over here, a lot of red growth I can see already, like negative 28%. So we'll see the actual numbers. These earnings are earnings per share, $1.81. Revenue is $2.95 billion. So we'll see the actual numbers that come out. We got Regions Financial Corporation, Huntington Bancshares Incorporated, Comerica, World Acceptance Corporation. So a lot of financials this week. Okay, and that's particular. I pay attention to that because I trade the Dow Jones, and it's comprised of a little bit of finance and banks in there. Okay, so that's our earnings tomorrow, and real quickly, guys, thank you guys for joining everyone on YouTube. If you guys can hit the like buttons right now, if we can all hit the like button, it really will help get the algorithm going, and maybe we can find some traders around the world who are looking for some trading education and wanting to join us here on this call. And it's always better when we get more people on here. It makes for a better stream. So if we can all hit the like button, thank you guys. It just jumped from 79 to 88 viewers, just like that. You know what I mean? So if we can get this to over 100 and maybe 200 viewers, it makes it a much better stream. And this is our free Telegram. I pinned it at the top of the YouTube, guys. I highly recommend that everybody on the call is subscribed or linked into this. It's free, but it shows everything that we do. These were a couple trades on USD JPY right here, running over 25 pips. We give some trade signals over here too, so that's another thing. That's why you want to click on this. You'll get maybe a free signal every single day to show what type of signals we send out and how they're managed, and just everything we do in here, giveaways, promos, links to all kinds of things, members feedback, and everything that's going on in SST you get in the know here. And these are our links, guys. If you want to visit our website, stocksnipertrading.com. If you want to give us a follow on Instagram, this is our Instagram, and then you can follow also SST and myself and Dave individually. And this is our YouTube channel. So there's a lot of content on our YouTube channel, guys. I can't stress enough how much webinars, how much tutorials, how much live trading we've done on there for the past 4+ years. It's stacked with content on there, guys. It's like endless content. And here's the Instagram, guys. If you can give us a follow here too. Thank you for all the followers and everything like that and all the support we get. And if you want to follow Dave, Big Dave right here, Dave Analysis, and this is me, Sniper Ronnie FX. We also have Trade Passing, not us, but we help promote this. This is a service, guys. If you're having difficulty getting through a phase 1, phase 2 of a prop firm, you can go to this company, tradepassing.com, or their Instagram, and they have a 50% promo right now where they will pass your account for you. It might not be your prop firm of choice because they work with a select few prop firms. So if you're interested in that, look it over on the weekend, and if that's something you're interested to. And then also, guys, if you're interested also in expert advisors, EAs, this is MQL5. This is our sniper kill shot. So this is one that we created with a partner here. And this one, if you like set it and forget it trading and you understand EAs or you want to learn about them, this is one that it's got some really good results with GBP USD and NASDAQ, and so there's going to be some more set files coming soon. Okay. Wow. Yeah, Griselle, thank you. Yeah, Griselle in our group already had hers pass, so excellent, Griselle. Congratulations, and you're live now. So just continue doing what we teach here and risk management, Griselle, and I can't wait for you to get your first payout. So keep us updated, Griselle, and thank you so much for letting me know about that. Okay, and guys, let's get into it. Okay, so let's go right to the charts. We're gonna do gold. Gold is just consolidating right now, and we're gonna do crude oil, US oil, right over here too. Okay, guys, are we familiar? Are we getting more familiar with Bookmap? Are you guys understanding more and more how this platform over here works on my right screen? So this is live liquidity. This is the futures liquidity. That's why these numbers, like right now, 2024, and they don't necessarily match up exactly because this is futures market over here. But yeah, Crypt, just slowly we'll learn this. It's not too complicated, but right now what it is these are transactions, okay? And we have offers above us. These red lines above us are these offers. Below us are the bids in the market. This is a traditional volume profile. These green and red bars below us. This white line that I use is called the VWAP. It's a volume weighted average price line. So it's kind of where the institutions like to trade. It's kind of like a magnet for the price and volume to come to. So right now we're just right below the VWAP, which is signaling a little bit of bearish, but it might just trade choppy sideways here until we get some real moves coming in the market. We don't have a lot of volume right now. Like gold has a really limited volume, and this in the background is what's called a heat map. So you can see, like I can see up here, see 2030 at the top, 102 offers in the current order book. You can see how red it is at the top. So that's showing a high level of liquidity up there compared to all the other offers in the market. Here's one level of you can just see how it's like this dark orange color right here. So there's 44 offers available to transact at 2028, and then below us we've got some big bids right here too. At 2022 there's 64 bids. So it's showing us where the live liquidity is, the heat map. Like see here how there's this, the heat is right here now at 2024. There's 52 contracts. So maybe the market wants to come down and transact into this liquidity right here. Okay. I understand, guys. Like Penchal, USD JPY is looking good. I understand. I understand, Franco, that NASDAQ is insane right now. That's the thing, guys. Okay, so again, structure on these calls. We can look at 20 different securities. Everything is going to be moving. One day, what we're going to do is kind of like a freestyle session. You know, like when you watch sports, like football, they got like the Sunday red zone, and it flips from game to game to game to game, and it shows you clips. What we're going to do here is we're going to go chart to chart to chart to chart, not like a full top-down analysis, but if you guys say, let's look at USD/JPY, I'll jump to USD/JPY right on the 5 minutes. I'll chart it really quickly, and we can start to analyze it and look for something, and you guys can ask questions. Then we'll go to next thing, and then if Franco, you want to go to NASDAQ, we go to NASDAQ. So, like, we'll just go chart to chart to chart. It's kind of like we'll do a fast session like that, and we'll look at everything, how everything is moving. But sometimes we need a little structure where we stay on one or two securities. We did USD/JPY yesterday, so today I said we're going to do oil and gold, so I kind of want to stick with that and go from there, okay? We can maybe look for a third chart if we have some time, and then we can throw in either NASDAQ or USD/JPY. And then this below us, this is what's called the cumulative volume delta. Right now it's positive 187. So you can see it came from less than negative 200 down here. This is the baseline 0, and now we're pretty positive right here. But the price of gold is not moving up. So this is kind of a little bit of divergence where the volume is positive, but the price is maybe pushing down still. So this could be a false signal. Tokyo kind of gives a little bit of false signals from time to time, so we have to be careful when we're trading in Tokyo, okay? And and then these are the tickers up here: GC, G4, COMEX, Rhythmic, that's gold. And then over here, guys, we're going to also look at crude oil, CLH4. So these are the contracts over here in the futures. This is crude oil, and these are the time slices on 15 minutes. So this is 8:30, 8:45, 9 p.m., 9:15, and we'll have 9:30 coming up. So the same thing. Now $74 and $73.89. We're talking crude oil now. There's our offers. There's our bids. We're below the VWAP. And if you guys are interested in using Bookmap, we have a free account you can use. The description, click the link, and you can do it with Bitcoin. If you guys want to learn more about futures and the contracts, you can go right over here, help. Okay, how many of you guys have done this? And under symbols, and this is where you can find the contract. So you see these letters that I have, F, G, H. Right now I'm on H. See the H over here? So I'm on the futures contract for March for crude oil. I'm on G for gold, GC. So G, I'm in February's contract. And you can see when we go to April, it's J. When we go to May, it's K. June, July, M, N, Q, and so on and so forth. And then when we're looking for the security, like here's E-mini Dow futures, CBOT. This is where the Rhythmic is, and it comes from the CME exchange. And this is how you can locate what you want to trade. We can do US Treasury bonds in the futures. If you've seen the bonds right now, 10 years are up right now. That's why the market was a little bit bearish. The bonds are up. We can do soybean futures if you guys like. If we want to trade soybeans, we can do soybean futures, okay? So this is Bookmap. This is our symbol table, and this is where you can find all the futures contracts in here, okay? Now, let's start off with a top-down analysis. If you guys are ready, I'm ready. Let's go with gold, and then we'll go over to oil. We're going to do this. Right now, it's like really choppy. Like I can see the range right now. The range is about 2022.50 up to basically 2024.50. So that's about a $2 range, about 20 pips. So you can scalp in here. Like for example, if you're buying the bottom, it's coming up 10, 15, maybe 20 pips. And then if you're selling the top, it's coming down 10, 15, maybe 20 pips. If you don't feel comfortable trading inside here, then again, just be patient, box it in, do some other things, set some alerts, and we are smart. We know that gold is not going to trade from 2022 to 2024 all night tonight. It's eventually either going to make a move after. So this is a stage of accumulation. The markets need to accumulate a certain amount of volume before they can either break it out bullish or they're going to break it down bearish. Okay, so let's start off with the daily. Let's just understand how gold was moving. If you weren't trading today, maybe let's go over a quick little thing. So every single day we always talk about this situation over here where it was the all-time high breakout. I don't think I need to keep talking about this. But that's why we recommend that you join us daily, so then you get to know exactly what we're looking at. That was the all-time high breakout, then it sold off from there, and then it came down to this level. Remember this level? It's still a pivot in the market. We haven't came down into this area yet, so we still have to recognize this. So I do it with a big green box like this to show me that there was some support over here when it came down a 3 days, and then it settled down in here and then broke right back out of there. Has it came down in here yet? No. Remember we were talking about that yesterday. Was it going to come down in here? Some of you guys said, yeah, we're going to come down in here. Some of you guys said no, but maybe in the future we might come down. But right now we got a bullish candle from yesterday that kind of rejected this area. Okay, and we also have our upper supply area, maybe up here, these big wicks like over here. That's our upper end monthly supply. So this area 2075, 2080, that's our big red box. So you can see like we're kind of consolidating in here. Now I can even trap it even further. I can draw a line right here, and you see guys, if I am going to place a line right here. So it's going to be a yellow line at these bodies right here. Okay, and who's going to read my mind? Who's going to tell me exactly what's going on here? Where I just placed that yellow line. Do you guys see anything? I want you guys to see something because I can see it. Can you guys see it? What am I going to say? You guys, can anybody read my mind here? Because if you guys can see this, you're on your way to understanding price action and to understand psychological levels. Anybody? There you go, Kobe, perfect. 50% of the green body. See this big green body? Do you guys know what this big green body was? Anybody? Okay, now I'm testing you guys. Let's go. What is this big green body? Anybody know these dates? Because if you trade every single day, you should know these candle bars exactly by date and size and exactly what this is. Any of you guys know what this is? This candle, Wednesday, December 13. Anyone want to take a guess? CPI close, Penshell? Very, very close. Not CPI. This one starts with an F. FOMC. Jen, you got it. So this was FOMC. So you see how the market came down red, and then the day before FOMC is kind of like an inside bar in here, and then FOMC with Powell, the interest rates, gold had a nice little boost and started that uptrend that came right back into that supply area. Then we push right back down. But if I'm eyeballing the body, open close of FOMC, 50%, half of it is right around there, right? So look at now the last 2 days, how we came right down red, and look at where the bullish ignited candle yesterday started. Right around 50% right there, guys. So this, if I told you this wasn't a daily setup, if I told you this was a 5-minute chart, same rules apply. That's why if you learn this style of trading, you can trade any time frames that you want to trade. Now see what I'm doing? I'm just catching like that body below that critical yellow line and the wick of Wednesday, January 17. You see how it came down and it stopped right there. But I'm drawing another box, and it's not going to be red because our volume is above us. So I'm going to make this green now. So you see what I'm doing? I'm identifying different levels of demand in the market. This is the bigger demand. It's untapped down here. We haven't came down here, but this one might be more active. So we traded in it yesterday, and it came up, and then look at today. Sorry, I keep saying today. Here's today's little candle. This candle here yesterday, it's a bullish ignited daily candle. So same thing. You know, like when I say a 5-minute candle opens bullish ignited, it opened with demand, and then first thing that it's going to try and do, where do you think it wants to go? First thing, where do you think this green candle, if I didn't show you what happened right here, when it opens, what do you think its first target is where it wants to go? Come on, guys, let's go. This is good learning for everybody. Yes, Aaron, my man, 50% of the red candle. Perfect. Okay, that's our first target. Okay, like right there. See the big red candle? Half of it right around there. Okay, and then remember yesterday what we did? We got some data to the left of us. We've got a wick right there, we've got 2 wicks right there. So yes, you can keep it at 50%, but if you want now, let's bring the line and kind of maybe make it a little bit more accurate where we get some touches. Now I got a touch right there, I got a touch right there. There I almost got a touch, and I got a touch right there. 2016. Okay, so that's the first fill. It's coming up green, 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 and then it gets to this yellow line. It could have got rejected right there and it came back down. But this one had a lot of volume where it kept coming up and it came all the way up. And then look at where we closed. Okay, so look at our wick. So that was our opening price down there. I'm going to use a purple line down there because remember what I always do. Purple for my high and low. So I'm just going to make this a purple line right here. Okay, so our low of the day is our bullish kind of ignited open, and we came all the way up, and look at our high. We basically closed right at the high of the day. This is a very, very bullish candle. It didn't engulf the entire red candle previous, so we still have to give respect to the big sellers the previous day. Look at this big red bar above us. So just looking at this big red bar, what do you think I'm going to do with this big red one? I'm going to do a yellow line halfway of that red bar, right around there. And I can see body to bodies right there. So what I'm going to do is I'm just going to bring this yellow line right down to those bodies right there. 2041. See what I just did there? So body to body, and it's conveniently 50% of the big red candle. So since now we got to maybe push green, 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 green to come up to there, what am I going to do for a heads up there? I do this for everybody here on the call for like visual, maybe a little bit above and a little bit below, and I'm going to make a big red box because maybe that's where the market will sell gold off if it does come back up there. It might not even come up here, but we got to prepare for Friday and maybe next week if it does come up there. Now what we got to do is locate. Remember, do you guys know what a piercing line pattern is? Now I'm talking about 2-bar candlestick patterns. A piercing line. A bullish engulfing is a green candle that comes all the way up one single bar and closes above this body. And it completely engulfs the previous day's red volume. The buyers engulf the sellers. The buyers outweigh the sellers. But right now we didn't engulf the entire bar, so we still have to respect this red volume right here. But we did close above 50%. So that's still positive. It's still strong, but it wasn't strong enough to take out the entire body. So we need help of this guy right here. This is our next daily candle right now today. So what we're going to do with today's daily candle is just go through the motions. So we opened and we came down bearish. It came down red, red, red. So that's my low of the day today, 2021 and let's say 25 cents. Remember those quarter increments, 25, 50, 75, $1. 25, 50, 75, $1 on all securities. Watch when we go to oil. Watch when we go to USD JPY. Watch when we go to NASDAQ. Watch when we go to US 30. Just keep an eye on those quarter increments, okay? So we opened, it was green, but then it came down red, 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 and stopped right there and pushing up. So it's technically, it's still bullish. We're above 50%. So over here, you see how we're moving away from this big green box? We're moving away from here. So what am I going to do with 50%? I'm going to give the benefit of the doubt to the buyers are strong down here. So I'm going to go a little bit above and a little bit below with a green box. Okay, so I'm just trying to really consolidate the pricing as much as I can because I want to scalp inside. Okay, so do you guys understand what I'm doing? These are the bigger boxes. This is a bigger red one up here. We're nowhere near that. And this is a bigger green one down here. We're nowhere near 2000. Okay, but this one might be active tonight or leading into London and maybe into New York. So if gold kind of maybe sells off again, comes back down here, maybe it comes down into the green box and then it bounces back out of here. Okay, that's one possible move. That's one possible direction. But what happens if the selling pressure cuts right through this green box and then pushes down a little further. Then we might trade halfway down to here, 2010, and maybe all the way back down to that green box. But also if you're a daily trader or a 4-hour trader, watch your 4-hour candles. Maybe you might get a 4-hour red bar that kind of closes below here. Then your next 4-hour candle comes back up and we change this box red, then it gets rejected. Then your 4-hour move is coming all the way down here, maybe possibly break that, and gold is going to drop. Oh, sorry guys. I thought, yeah, good. Thanks for reminding me. I had crude oil. Okay, look at how gold is really choppy. Okay, look at how it's just transacting right here. So careful with gold right now. Okay, it's really, really choppy on the 5 minutes. Okay, do you guys understand what I just did there? The directional moves. Now, let's follow today's daily candle as well. Okay, so it opened, short wick, came down, higher low, came up, it popped the wick, and it pushed a little bit, but there's not a lot of volume in the market. So we're going to now mark our high of the day. It's 2025.50. Purple line. That's our high of the day. So this is our range right now. 2021 to 2025. $4 range, 40 pip range. If you're scalping up and down, maximum right now is 40 pips. So if you're scalping for 10, 20, you can maybe look for 10, 20 pips, but the maximum is 40. If you think you're going to get 80 or 90 or 100 pips, you can see how it's moving in the daily candle. Okay, so if we come back up bullish, if it comes back up and fills the wick and we come back to the high of the day and we break out, where do you think I'm going to look for my first location to scalp? If it comes up green and impulsively breaks this purple line, let's all go through it together. Green, 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 and then look at where it might stop or kind of maybe come into this area. So I can look at the body to body right here, 2028.50, or maybe these two bodies right here at 2028 exactly. So this is your judgment, okay? Nobody is right or wrong. If I place a yellow line right here at these two bodies, we can do that. We're right if we do that too. If I come a little higher and I bring it to that body, you're absolutely right as well. Okay, I'm going to use more fresh volume because Wednesday, January 17 just happened a couple days ago. If I use these bodies, this is back in Monday, January 8. So I'm going to stay up here, 2028.50. So then if I was measuring from here, 2025.50, 2028.50, that's a $3 move. I don't even need to get my ruler for gold. I know that that's 30 pips. From the purple to the yellow line is a 30 pip move. If I'm scalping for 10, 20, 30, all I'm looking for is a fill from the purple to the yellow, and then I do my rules. I either go to a break even, I either scale out 80%, or I close the entire trade and I pocket 30 pips. If it continues to break, then let's go through it. Then if it breaks here, green, 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 then maybe it comes up to the top of Wednesday's high, and it's 2033. So let's place a yellow line up there. And then if it continues to push up, maybe we come up to our big red box up there. Okay, so that's for upside. But what happens if it starts to get rejected and we come back down where we opened? Then the candle flips red and we're coming back to the low of the day. We already have it. If it sells off from here, 2021, then maybe we come down to 2016, our green box, and then we see what happens here. If it continues to break down, then I look down in here. So from here, now, if you don't know where it could go in this black chart, see from here, it's all black. Okay, number one, if I didn't do anything, I would place a yellow line right at halfway, right at the halfway point. From the green to the green, halfway is right there. Very simple, very easy. And if it breaks, it could come right down to there, 2011, and stop and go back up. Or if it breaks, it's going to come down to the green. And then if you, again, look to the left of the chart, if you want to line up your yellow line, maybe with that wick or that wick, you can do what you want, you know, this, or halfway from that wick, halfway there. I just kind of eyeball where it's 50%. Right there, it looks good to me, 2011, perfect. So I've already done my daily grid now for gold on the higher time frames. Now I just look at the overall picture of how things are moving. So it came up, it made that all-time high break, they sold it off. That's where the buyers came in the market and they stopped gold from selling off at 1980. Then we came all the way right back up to our red box. It's a lower high from our all-time high. So the sellers came in the market and pushed it down again, where it came down here, and this was a higher low from over here. So the buyers brought it right back up for 3 more days, and then look, lower high, and then the big red candle continue push down. So the sellers are still in control up here, pushing it down, pushing it down. This red body closed below there, but then you see yesterday it kind of had a strong pivot and the buyers came right back in the market. So maybe we're going to consolidate in here, and next week maybe we're going to see if we're going to break to 2040, 2050, or if gold is going to sell back down to 2000 and maybe we break and come down to the 1980. Okay, so I don't want to just sit on the daily candle all day. Now what I do is I break down this top-down analysis and I go to the hourly. Okay, so you see here I'm going to click on 1 hour, 60 minutes. And then I follow my 1 hour bars so I can start to see where the big moves are. Again, what do I say on every single call? Focus on your bigger sessions, where the injection of volume is. What are our big sessions? Let's start from right now. From the futures Tokyo market. Do we know what time that is? Let's all mark this down. If you guys want to write this down, take a moment and write this down. I'm going to use Eastern time because I'm Eastern time. If you're GMT, just try and work it out. But I'm starting from right now, from the futures. The most important times that you should be really focusing if you're an hourly trader or any type of trader that you want to know your hourly injections, no 8 and 9 p.m. Okay, we started this call at 9 p.m., but 1 hour right before this call, 8 to 9 p.m. is the futures market when it opens up and Tokyo session. So 8 to 9 p.m. The next one is pre-London and London. That is 2 a.m. and 3 a.m. Eastern. Your next one is the bigger block from 8 a.m. Eastern. That's where we have COMEX. That's where we have our 8:30 USD red folder news, and then we have 9 o'clock is 9:30 is Wall Street, and 10 a.m. So that next big injection of huge volume is 8, 9, 10 a.m. and then go to the end of the day power hour 3 to 4 p.m. And that's your cycle, okay? And then look here, look at your big bodies. Where did this big red body come? 8 a.m. That's COMEX, 820 and news. Next big red bar, 9 a.m. That's Wall Street. And then it continues down into there, okay? And then here's kind of the end of the day, power hour and the close, and then just going through the markets again. Where are the big moves? Look at 8 a.m. every single day. Look at the big red bar. And then going in the afternoon, there's power hour. So this is where we are now. Gold came all the way down into here, and it started to accumulate. We're making higher lows, continuing to push, break some highs, close above here, continuing to move. Now we're consolidating in here. Look at our hourly bars. This 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, we've been consolidating in this range for the last 5 hours. So that's why the 5-minute candles are just in a really tight range right now. So this is more for small time scalping. So what I would do for tonight is maybe place an alert. Maybe let's see here. Maybe we're going to place a white line right here. Okay. Normally I place it right at the bodies, but it might be too tight right there. Normally, and then I use a white line for hourly. So, but I'm going to bring it down to these 2 wicks. Maybe right here. I got the wick, this wick right now, this hour, and then I got that wick right there, and 2022. So that's maybe our hourly support. If we can't hold this white line anymore, then maybe we're going to sell down to that low of the day and break and drop a little bit. Okay, but right now it's still strong. It came down. This is a higher low, higher low, higher low. If we draw like a trend line, you can see it's moving up, it's ascending, but maybe we're going to come back up and try to take out that high of the day, and then maybe to that yellow line and yellow line. Okay, and then let's look at the RSI on the hourly. We are at 63.64. It's strong. It's strong in here, but it still has the potential to continue to push up in 70 and really squeeze up there, or it might retrace down just a little bit back down in here. But the strength is strong. That's why we see this strong hourly move. Now what I want to do is I don't want to just stay. If you're an hourly trader, okay, let me just do this before I move on to the 5 minutes. Hourly traders, okay, if you're looking for a setup on the 1 hour, this is what I would personally do. I would box it in from the daily high today and maybe to that white line right there, okay? And make this a neutral hourly area, like this. And what I would do is, that's your hourly sniper trap and gap. This could be a bullish flag. Like you have your bullish rally coming from below us, and now it's kind of trading sideways, but a bullish flag pattern has a high probability of continuing to break up to the upside, okay? If you get some volume close above there and continue to move up. So then I would place an alert up here. If you do get your move, then you're looking for maybe a breakout, a retest of this area, and continue to move up there. You could be in a buy. Another thing that could happen is maybe it just bounces around and trades in here. It gets rejected up there and just trades again, accumulates for maybe a couple more hours, and then eventually they'll break it out. But I promise you, gold is not going to trade from 2025 to 2022 the entire night or the entire day. There's going to be a move, either bullish or bearish. It just depends who accumulates more volume. And the next only other option is it breaks down here and then maybe pulls back up and gets rejected, then we're selling down to the green box. That's if you're an hourly trader. I would place an alert right here, and I would place an alert right there. And let the volume come to you, and you get in at a different, you don't have to get in, wait for an hourly. You can get in at the 30-minute, the 15-minute, the 5-minute, but you're riding the 1 hour volume, and you have to have a little bit bigger stop loss because you're giving it more time to breathe, and you're going to have a bigger take profit than just like a 1 minute or 5-minute scalper. You're looking for a bigger move. You might be looking for 50 or 100 pips. Or more. Okay, so that's an hourly consolidated box. Now what I'm going to do is I'm going to move to the 5 minutes now. Let's go to the fives. This is what we normally trade. So you see the 5 minutes in this neutral box. That's our hourly consolidation. Yes, we had a little minor breakdown there, but nothing really materialized. It came right back in the box. We had these little choppy candles that broke down there and came right back in. We haven't really tested the top. Right there we tested the top, but then it got rejected. So that's our hourly consolidated box in there. So you can see the hourly is just accumulating. I'm going to just remove this because what I can do now on the 5 minutes is I could make this even a little bit more tighter. What we're going to watch is up here at the purple line, we see when it came up there, we got rejected. So I'm drawing a red box like this on the 5 minutes. So that's maybe where we're going to get a double top up here, or we're going to see maybe a breakout up here. Okay, so we came up right up here, 840 before we started the call, then it came back down and it held. That's that white line, that hourly support line. I could bring it down a little bit and manipulate it right there, guys. Okay, I could bring it right up there. You know, it's up to you what you want to do. I'm going to leave it at those bodies, and with those wicks, I'm going to make my green box right there at those wicks and bring it there so I don't get maybe faked out. Okay, see what I'm doing now, guys? I'm now trapping the 5 minutes. Okay, and if I want to measure from the red to the green, let's all measure together so we know exactly, if we're trading inside this box, what the pips are. 25 pips. See it there? 250 points is 250 pips. From top to bottom, bottom to top. So this move that came down here, if you bought this green candle, you place your stop loss down here, you are up 20 pips right now. Okay, maybe possibly more if it breaks out. If you sold up here and it came all the way down like that, you made 20 pips. Okay, that's the maximum allowable pips scalping these zones. And it could come back right back down. Now if it comes right back down, is it going to come all the way to the green box, or is it going to stop somewhere? So now what I got to look at is the structure that's being built here. See these wicks where it came up there, resistance, and got rejected. And then it came up here again. Those wicks, resistance, got rejected. Came up here again, wicks, got resistance, rejected. So if I place like a red line around this area, see what I'm doing, guys? You guys see that? Okay, so I place a red line at those wicks, red line at those wicks, red line at those wicks, red line at that wick. Now we got volume closing above. Is this red line going to act as support? If it comes down red and stops right there, maybe builds, then we're going to keep the volume inside here. Then we might get that potential squeeze and break out of here for an impulse move. So if I really want a tight squeeze, like really tightly consolidate my 5 minute candles, I can consolidate it like this. Okay, and maybe it will flag inside here and keep building, and then we break out and we can buy up there. Right now, this is where the resistance is on Bookmap. So you see that big heat right there? That's what's not allowing it to break out. So what will have to happen now, it might have to come back down and pick up some more bids and accumulate so that it gets more volume to potentially break this area. So I'm just going to place a yellow line on Bookmap right up here just to show us where that resistance is. We're above the VWAP. We're currently 250 cumulative volume delta, and if it can't hold in here, then maybe this thing is going to come down red, close below here, maybe come back up and retest this, then it might sell back down. First, where's support levels? First support levels here, 2023. Why? Because those bodies right there. So, and then if I'm doing small time scalping in here, I put my red line like right at those bodies, and you see 50% of that green candle right there, where it closed above, it retested it and went up. So if I'm looking to sell, like maybe from right here down to that red line and just can maybe catch 1 or 2 red candles just coming right down there, I don't guess, guys. I don't guess. I measure. I measure, and you see what it is right there? It's about 10, 11, 12 pips is just the range. Then you also have to factor in your spread. I have about a 1.2 pip spread on gold, so one pip. Maybe there will be a little bit of slippage there if you execute a market order. So net, are you going to get 12 pips? Not likely. You might get 10, you might get 9, you might get 8, but that's the nature of the game. These are things that you need to know with your broker, how fast they execute, their speeds and things like that if you're scalping inside here. If it can't hold that red line, then guess what? We're going to come down to our green box and maybe it might be a 20 pip trade. So right now, let's look at the pattern. It came up one time, that's one top, got rejected. It came down here and it came back up, and look at our double top, and it might be right now getting ready to break down. But if it holds, it might come back up and try to break that and maybe break out. It might be an impulse breakout. Then we look where it will close. We flip the red box green. Maybe it will retrace back down to here. This might be a level of support, and then maybe it might come back up to that level. Okay, but right now it got rejected up there. Okay, so now this could be an impulse break, or it could, we watch the volume where it will close, okay? And if you want to add some EMAs or some technical indicators to kind of complement your chart, I use the 9 EMA. It's this green line, 9 EMA, exponential moving average, 9. So it's right there. It's right at the 9. And then I also add the 200. The 200 is all the way down here at 2018. So it's nowhere near where we are. We're above the 200. We're right at the 9 EMA. Okay, and guys, I'll give you this chart in Zoom, and we'll place it, and then we'll watch gold for a couple minutes, and then we'll do oil together, and then we'll watch both of them side by side. Okay, so Zoom, there's the trading view chart. If you guys want it, it's in there. Everyone on YouTube, 180 viewers, thank you guys. If you guys like that type of top-down analysis, can you guys hit the like button? It allows me to know that you guys are learning this type of top-down analysis. It's helping. Sanam, can you explain more about the EMA? It's an exponential moving average. 9 means it's kind of given us a calculation of the last 9 bars. The 200 EMA is more of a higher time frame. It's giving us more of a calculation of the last 200 bars. Normally, when we are above the 9, above the 200, it is seen to be bullish. When we're below the 9 and below the 200, it should be bearish. You should be selling or selling pullbacks. What we often look for is a golden crossover or a death crossover. This is where this type of move, where the 9 crosses above the 200. You see right here where the green line crossed above the purple line, and this started this big bullish move, and that's where gold kind of got that. It's kind of diverging away from the 200, but it kind of started right here. And sometimes you're going to see where you can get a quick scalp, sometimes where the 9 crosses below the 200 and you can kind of sell this area. It gives also false signals. I wouldn't just trade off of crossovers. Hopefully all of you guys are aware of that. This is just to help with confluence if we're getting into a trade, but I don't technically trade off of these things. I don't even add them on my chart until after, but I use them just to help out. Same with this indicator right here, this RSI. This indicator too can be deceiving as well, because when it's above 70, we're all retail traders, we're all told to sell. When it's below 30, we're all told to buy. But I've seen where it's gold has stayed above 70 for hours and days and never sold off. I've seen it where it was below 30 for hours and days and didn't come back up. So you don't want to get trapped. What you want to look for is kind of like a divergence where maybe the strength is going up, but the price is coming down, and then maybe you see a type of divergence. Okay, this candle is going to close in 1 minute, so let's watch where it will close. Will it close below here? Will it come back inside here? 93 octane. Why is the 20 EMA so highly regarded for scalpers? 20 and 21. I like the 21. Why? Because they're nice permutation numbers. Okay. Do we know what permutations are, guys? I'm going to talk about mathematics now. I'm not a mathematician, but I do love math. Does anybody know what permutations are? Does anyone know what Fibonacci retracements are? Fibonacci, Leonardo Fibonacci is the Italian mathematician. Let's all do this together. I'll tell you right now what are permutations and why 21 EMA, and these numbers are really good numbers to follow in the markets for price action. What's 1 plus 1, everyone? 1 plus 1? 2, right? What's 2 plus 1? 3. What's 3 plus 2? 5. What's 5 plus 3? 8. 8 plus 5 is 13. 13 plus 8 is 21, and you can keep going on and on and on. And if you divide these numbers now backwards, if you go 21 divided by 13, you're going to get those Fibonacci sequences. You're going to get the 236. You're going to get the 618. You're going to get the 78.6. These are all mathematical permutations, and I love math. So that's how the markets move. They move with psychological numbers. They move with permutations. They're gravitated to these whole numbers like 21, like you just said, 2021. Those ones, they're highly regarded. So that's where you get a lot of these indicators. Do you guys understand that? Did that help? Yeah, Jen, you're doing it. 21, 34, 55, 89. They're all of these numbers. And when you divide them backwards, you're going to get those sequences of the 618, the like all of the Fibonacci ratios. I love math. I'm a math nerd. So I took calculus in university and algebra and all of those things. So I do enjoy math. Okay, so hopefully that answered your question about those numbers. Okay, so what happened now? We broke down, so we couldn't get a higher high up here. So it came down. This is the initial break. Is it going to continue break down, or is it going to come trade back into this box? Okay, so we just traded now right back down kind of to the VWAP. And now it's too messy right now. Like this is really, really messy inside here. There's no volume, okay? Do you guys want to look at oil too? Do you guys want to get two charts done really? Or let's wait till 10 o'clock. It's 9:56 right now. Let's wait for the next 3 minutes. We'll wait for our new hourly candle. We'll see how gold closes. But guys, how's your learning? Number one, okay? So we take our time right now to learn in this Asian session, because when we get to New York next week and the week after, it's going to be much faster than this. Okay, Ron's going to be talking a lot faster. Ron's going to be highly caffeinated with a lot of coffee, and so I really want you guys to follow. That's why we take our time in Tokyo to explain concepts, to explain what we're doing, because we're going to do the same thing in New York, but it's going to be a little bit faster. Vic, does Ron enjoy doing math during tax season? Good question, Vic. I'm good friends with my accountant, and we like to crunch numbers together all the time. But you know, living in Canada, the tax man likes us. The tax man loves us in Canada here. Yes, Aaron, we're doing New York next week. 1 to 3, 3:15 p.m. Then I got to go grab the kids. But we'll be doing New York for the next couple weeks. Sinam, you're new to trading. Any advice? My advice is to take your time and learn. Educate yourself. trade with a demo account or trade with a live account but with little money, micro-sizing, okay? You're not going to get rich, but you're going to learn. And don't learn with making money. Listen to what I'm saying, everybody. Don't learn by making money. Learn by making pips or percentages, okay? And then that's the universal language that we can all talk. Like if I was to say I made $1,000 today, that sounds good, $1,000, but did I make that $1,000 with a $1,000 account? Did I double a $1,000 account? That's pretty impressive. Did I make that $1,000 with a $10,000 account? Or did I make that $1,000 with a $100,000 account? Or did I make that $1,000 with a $1 million account? So these are things that 1% is 1%. No matter where you are in the world, no matter how much money you have in your account or what account you have, 1% is 1%. We can all measure each other with 1%. Because then at the end of the day, depending how much capital you have, then you can decide how much money you want to make. So then if someone has a $100,000 account and they make 1%, that individual makes $1,000. If someone just has a $100 account and they're learning, but they still make that 1%, they made $1. It's not enough, but they still made that psychological 1%. So if you have the funds, the money, then you'll be making $1,000 if you have 100,000. But there's the prop firms. We teach if you don't have the money, learn how to do a prop firm, and maybe you can go to a $25,000, $50,000, $100,000 account. But what I'm trying to get at, long story short, is learn either pips or percentage, have a daily goal, and strive for that daily goal, a realistic daily goal. I hate when people say, Ron, I want to make 100% today. I would love to make 100% today too, but can you do that every single day of the week? 1% is reasonable, realistic. We can all do that. Okay, that's what you got to aim for. If someone told me this when I started trading 20 years ago, my journey would be a lot different. Okay, so I was always just, I got to make money, I got to make money, I got to make money, and all I did was lose and lose and lose and over leverage and over trade and not respect my stop loss, revenge trade, all that shit. So if you're listening to what I'm saying, take your time, learn. You have a lifetime. Trading takes 5 minutes to learn, but a lifetime to master. Okay, that is very, very true. We can teach candlesticks in 5 minutes. You can learn basic patterns in 5 minutes, but it will take you a lifetime to master those. Okay, so put the time in to learn. That's what I feel like a lot of traders are neglecting, is the learning phase. They just want to jump in and get rich. And it takes a lot of hard work, sacrifice, dedication. Look at some of you guys. It's 4 a.m. in the morning and you guys are up learning. So that's the sacrifices, It takes time. That's my advice for any new trader, any beginner, any advanced trader, anybody on this call. If you're listening, that's my advice for everybody, especially if you're a beginner. That's how I would start. Then you don't have to go through everything that maybe all of us went through on this call, with financial losses, with a lot of stress. You don't, if you're starting fresh, start off the right way. Don't do what we did. Learn from our mistakes. Okay, so it's 10 p.m. right now. This is the new hourly candle. So we close below here. Is it going to come trade back in this box, or are we going to just start selling back down? Okay, so I don't like this type of price action right now. It's really, really thin volume. So maybe we'll just leave gold for now. Let's take a look at oil. Yeah, oil is consolidating as well. Okay, so I'm going to do a faster top-down analysis on oil. I'll leave gold for you guys if you guys are still looking at gold on Bookmap. It's still heavily inside this range, right near the VWAP, so just be careful in here. I'm going to do a full chart on oil, but I'll leave Bookmap on gold. Okay, so oil. Now, there's a story for everything, for any security. Are you guys paying attention to what's happening around the world? It's unfortunate what's happening around the world, but it's happening, crude oil, okay? The world fights for crude oil. There's wars for crude oil, okay? Right now there's tension in the Red Sea. There's with supply and demand of shipping containers, with oil tankers. That could affect the supply and demand of oil. If you look at the news, remember Forex Factory, oil inventories. Did anybody do we have oil traders in the group? Do you guys follow oil inventories right over here? So crude oil inventories this morning at 11 a.m. Eastern. What does this mean? Right here. We didn't talk about this. What does this mean? Crude oil inventories. If I'm an oil trader, I need to know what this is. So previous was 1.3 million. They were forecasting a decrease of negative 0.6 million. This was the actual number that came out this morning, negative 2.5 million. What does this mean? If you don't know what it means, maybe click on the folder here, and then there might be some articles of reference to read. You can see what it measures. So it's a change in number of barrels of crude oil held in inventory by commercial firms during the past week. Actual less than forecast is good for currency. It's released weekly, 4 days after the week ends. While this is a U.S. indicator, it most affects the loonie. That's us in Canada. It affects the loonie due to Canada's sizable energy sector. So our dollar, Canadian dollar, loonie we call it, it holds a lot of value because it's kind of backed by crude oil. Okay, so I hope you guys know this if you live in Canada. It's the primary gauge of supply and demand imbalances in the market, which can lead to changes in production levels and price volatility. Okay, and then here's some nice little neat articles if you need related stories. Crude inventory decreases by that number, 2.5 million barrels. So why is crude inventory decreasing by 2.5 million barrels? And then you can continue to read. U.S. crude oil refinery inputs average 16.7 million barrels per day during the week ending and things like that. So maybe what's happening around the world is affecting supply and demand. It's lowering the amount of barrels out there. So maybe we might see the increase at the gas pumps coming in the next few days or weeks, depending on what's going on in all the tension around the world. Okay, so I don't know if you guys follow those oil inventories, but I do. I follow oil quite a bit. It's a nice security to trade. It's very nice security to scalp as well. It's got some nice moves. It is volatile just like gold, and this is also really nice for swing traders. So if you're a swing trader, we're going to start off on the daily. Look at your 4 hours. You know, there's some nice moves on this thing as well. Like if you were selling when it tapped into $95, you sold $90, you sold down here. Like you can see when it was trending down. And now we found a little bit of a bottom here at like $68. So we're kind of just consolidating in here. But let's start off again with the daily, and then we're going to move all the way down to the 5 minutes. So how are we moving? Real choppy lately because everything that's going on around the world. It's coming down, going back up, coming down, going back up, coming down, going back up. But right now, it's been building. So let's see. Our bottom pivot for crude oil right in here, $67 a barrel. Bring this big green box and bring it into the future, okay? Bring it into the future. How far? Someone asked me the other day, Ron, how far should I take it? You take it as far as you want to go. Look, there's March, April, May, June. Take it wherever you want, okay? It's a static zone. Where's our supply? We see when we came up, we got pushed down. There it pushed down. We came up again, $75, and they pushed it down. So my big red box on the daily for crude oil is up here, $75. Bring it across, okay, and make it red. We're getting our bigger levels. Now we're kind of just maybe consolidating inside here, but there's still, we can make some trades, we can make some moves in here. So let's just follow it. When it bottomed out here, it came back and it kind of closed above this resistance area, and it continued to push all the way up to $75, $76 a barrel. When it came up there, that was the end of December, okay? And then you can see kind of like Christmas time, December 27, then going into the new year, it was trading down here. It came all the way down to the bottom, 69 and a quarter. Look at those moves, 69.25 cents, and it came back up. So now, are we building a little bit of support above our green box? Yes, we are. Let's look at our bodies. Okay, right there, yellow line. See where the bodies are? Yes, it was an impulse breakdown there, but it came back up and it closed all the way up here. Here we tapped into this and it went back up. Here it came down and back up. Right over here this week, Wednesday, it came all the way down here and it came back up. Yeah, yo, just take it easy, bro. Take it easy. I know you're excited. Yesterday you were real excited, but we're trying to explain some concepts right now. So just take your time, relax, and just take your time like a sponge. Just absorb some knowledge, absorb some information. We have a lifetime to trade together. We'll be scalping until Ron is 100 years old. Okay, so just take your time. Right now we're explaining some important topics on crude oil right here. Okay, so guys, are we breaking $70.40? Do we have any red volume closing below here? No, it's tapped into there, but the demand keeps pushing it up. Okay, and so what I could do is also another green box, maybe catch that wick and bring it across green. Someone will say, Ron, well, why didn't you come all the way in and grab that one? Because it's too close to this one. So maybe I'm just want to kind of bring it right there. Okay, for visual. Sometimes I don't use the green box, but you see what it's doing? It's making a higher low on the daily from down here. So the crude oil is picking up, but we're not breaking any new higher highs. Okay, see this big strong green candle Friday, January 12th, we came up green, but then it got rejected there. We couldn't take out that high. So the sellers are still in full control, and then they pushed it down. We came back down, and now it's coming back up. So we have like another important area, like right over maybe, and then there's gaps in candles. See where we closed on daily and they gapped it up. Sometimes what I got to look at is sometimes they gap up the candles, but there's other bodies to look at. Here's a body, here's a body, a body, a body, and then there's another body. And then it lines up perfectly with yesterday's low. So I'll draw another yellow line and I'm going to place it right here. See where I just placed it? I could have came down to that body, could have came down to that body. But what I'm doing is I want to get more touches. I got a body, a body, a body right here, a body right there, and then yesterday was red, and it stopped right there at $72.16, and we came up. So another green box. It kind of maybe catch like down here, and you can see that the demand is continuing to hold the price of crude oil. So we're ascending. If you want to use like a trend line from down here, you can kind of see we're continuing to push up. Yes, there is impulse breaks. I know there is, but no volume closed below there. So it was, to me, these are liquidity grabs. They came down red, picked up all the pending orders, and then they closed it near the high. That's why this daily candle, that was your beautiful scalp daily candle right here, where you can see, if you follow daily candles, guys, everybody can be a swing trader on this call. Just look at this, okay? If this was a 5-minute setup, would we have scalped this 5-minute candle? Possibly. Why are we not trading it on a daily candle? It came down red, and then it came back up, picked up all those orders, and it closed near the high. Okay, so that tells you something psychologically. They came down there, they hit all the pending orders. This is where all the money is sitting, the liquidity. They got it, the buyers picked it up, and they closed near the high. Now the next candle, we assume it's going to open red to come back down to maybe retest the body of the candle. So it came down red, stopped right there, again picked up the bids and came right back up. As soon as it's breaking the wick, you could buy the daily candle, place your stop loss below here, and measure the next move to fill maybe up to these bodies right there. That's 125 pips. $1.25 a barrel is 125 pips. Okay, and it moved up actually 150. You could have been done for the day. You could have bought it, stop loss below there, had maybe a target to target those bodies, just like when we're scalping. You know, when a 5-minute candle fills to the next bodies, when we're scalping, it's 10-15 pips, but a daily candle is 100 to 125 to maybe 150 pips. Your daily goal could be done, or you could still be holding your buy, but you could have scaled out. Now you could have taken your stop loss. You could have been at a break even right now. You could have been up 100 pips plus, and you're running a break even. You could have also scaled out maybe 50% up there. Okay, and then now let's just follow what's going on. So we came up, and then it closed right here. Today, right now, we just opened up. How did we open? We opened right here, purple line, $73.80 is our opening price. And what happened? It opened and it came up bullish. It was green, 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 and it stopped right there, $74, and it got rejected and came back down. Did it break the previous day's high? No. So the sellers are still in control and pushing it down. So our purple high is right there. Okay, so, and then see the impulse wick? Impulse wick. Guess what I'm going to do up there? I'm going to place my red box at that wick and that wick, and bring it across. Now I know where there's kind of some supply in the market that keeps pushing it down. This was a strong green candle that came in there. They rejected it. Next day they gapped it down and really pushed it down. This was an impulse daily candle break out of there, and then they rejected it hard and they sold it off. Yesterday we came right into there and then they sold it off. Today we came again up there and then they did a lower high and they pushed it down. So now if we push and we sell off on crude oil, what are we going to do? 50% of the green body right there. That's about half of it, correct? $73.29. Let's put it at $73.25. Those 25 cents. $73.25, yellow line. Okay, because we might sell and it might come down red, 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 red and stop there. And we collect 50 pips, and maybe we'll get a wick and go back up. If it can't hold here, it's going to come down and then maybe try and take out the opening candle right here the previous day. There's my next yellow line. Then if it keeps selling off, green box. If it keeps going down, then it will come down to these bodies. And then I make my grid system. If we hold and then we continue to push back up here and we break out, we got clean traffic. We can basically fill this wick and then come right up to trade into here. Okay. But that's how it looks on the daily. Now let's go to the 1 hour. Okay, look at the 1 hour. When was the big moves? Here's your double bottom, came down, back up. There's my neckline, came down, double bottom. When? 8, 9 a.m. Those times I just talked about. 8, 9, 10, 10, 11. Those are those crude oil inventories. Continue to push up. Again, when did it come down? Look at it. Sold off 8 a.m. Sold off, picked up the liquidity, and then 9 a.m. and 10 a.m. shot up. There's your oil inventories today, this morning at 11 a.m. It was good for supply and demand, right? Negative 2.5 million barrels. What's that going to do? If they take out 2.5 million barrels, that's going to increase the demand for crude oil. There's your buy. Okay, so since then it came up and we got rejected. There's our one top. Here's our neckline. It came up again, lower high, and they're pushing it down. So let's see now on the hourly. Look at what we're working with right here. This is our hourly support right now. Like if we break this area on the hourly, like right here, like this green box area. If we break here, this is where crude could possibly sell all the way down. Where will it sell down to? If I'm scalping, 50%. Look at it. Look at the price, $73.50. Guys, I'm not making this shit up. I'm telling you, these are how markets move right there. Okay, 73.50, white line, hourly. If I'm scalping, I already know from here, 73.75 down to 73.50, 25 pip move from there to there. There's about 50% of that green candle right there. Could sell off right there, stop, come back up, maybe a lower high, break, and then sell all the way back down to 73.25. And if we're going to come right back up now, it's holding bullish. Okay, so where do I have some bodies and resistance? If I really, really want to consolidate now and get really deep down and dirty and scalping here, there's a body, a wick, and a wick. 73.87. So if I can start to break out above here, maybe I'll scalp up to almost $74 in here. Okay, so maybe it's going to develop strong and come back up. If it breaks down here, I'm setting alert. I could be selling crude oil. Now let's go to the 5 minutes real quickly, and this is what we're scalping. Okay, so see how it's stuck in this range right here? There's my hourly white line. If I don't want to trade inside this garbage box, this is where I trap all this shit in here, and I make it neutral, and I wait. Okay, so we see it dipped down in here. When it came down in our big hourly demand box, it came right back up green. Came down again, went right back up higher highs. So are we going to close above here and maybe break out? And if we do, we could possibly scalp up to maybe these bodies right up here. If I'm measuring from white to there, I don't even need to measure. 87 and 94, what is that? 7 pips. Okay, if it goes a little higher, maybe up to there, you get maybe 10 pips. Okay, that could be our range. That's oil. Add a few indicators if you like. We're right above the 9. Where's the 200? 200 all the way down here. See where the 200 is? The 200 is at $73.50. It's at my hourly white line. If we look at RSI, RSI is right at the 50. This is where it's neutral. This is neutral. Strength is neutral. The buyers are not strong. The sellers are not in control. Nobody's in control of the market right now. This is where it trades sideways, and that's why we're trading sideways right now. So we want to see kind of who will pick up the momentum. Right now when it's here, it's neutral. And that's why we see it in the price, how choppy it is. Okay, so that's an analysis on crude oil, guys. Gold sold off a little bit. Okay, remember what we said to the red line? Did anybody take that sell? Body closed below, retested any one of these bars. Maybe you could have a sell, stop loss maybe above here, and it came all the way down, red, right down to that red line, to 50% of that green candle on the 5 minutes. I know it's not a huge move, guys. It's not a big move, but if you sold from right here down to there, you just collected 10 pips. And in New York, this is a much bigger move. The same setup is possibly 20 to 30 pips, okay? Because there's more volume, but the same rules apply, okay? That's why we like to teach in Tokyo, and we trade more so in New York. Okay, did you guys understand the crude oil analysis? Does that help you guys a little bit? Almost 200 viewers, guys. Can you hit the likes? Did you guys like that? Tell me, please. Give me some feedback. You guys are very quiet. Like, I can teach in another way. Like, I'm a good educator. I can do other ways, but this is the way how I try to break it down. Very nice and easy for everybody. We start off on the top and we move down. Daily, hourly, 5 minutes. Figure out your levels, figure out your zones, and trade accordingly. And you know exactly how much to risk. So you know when everyone says, Ron, how big of a stop loss do I use? What stop loss? Just follow your grid. It's kind of like a grid map. You know, you're locating. If I'm going to take a buy, like for example, if I take a buy here, maybe I'm going to place my stop loss below the structure. If it's no guesswork, just measure it. If I'm buying up here, and I'm going to keep my stop maybe below there, I'm risking 10 pips. If I want to be below the entire structure, you see right there, it's 13 pips. I'm risking 13. Maybe a little more, I give it room to breathe, I give 15. But then my TP will be minimum 10, but maybe I hold it longer to get 20 up to that daily high. Unless you're just scalping for one-to-one risk to reward. Like you're betting $10 to make $10. You're betting $1 to make $1. Normally we'd like to see maybe a 1 to 2 plus risk to reward, but sometimes the market doesn't give it. Sometimes the market only gives you a 1-to-1 when you're scalping zone to zone. But the thing is, when you go into profit, try and bring your stop loss to break even and learn how to do that. But see, sometimes you get lucky. Sometimes it comes down to the red line, it comes back up, and then you get a big ignited bar coming all the way to finish off the green box. And then you kind of get the maximum move. So that was a double top up there, where it came up, back down, came up, double top. See, we were waiting for the move up there, but that bar that closed below, that was a good maybe area to maybe initiate a sell, and it came all the way down. And then when it gets down to this big green box, decision time. That's a decision, okay? So you have to decide now what you're doing with this trade. You either gotta, if you had your stop loss up here, you're going to a break even right now. Your other decision is you can close the entire trade. If you're happy with that, great. Close the entire trade and don't worry about what would have happened, what should have happened, what could have happened. Take your money and get out of the markets. Another thing is to alleviate that, if you want to leave a runner, close a certain percentage. This percentage is up to you. Everybody's different. A rule of thumb is close 50%, close 60, close 70, close 80, whatever you want. But you can close a portion and leave the remaining percentage as a runner at break even. If your runner continues to move, you bank some more money, but if your runner comes back up and taps you out, you'll only lose the 20%, but you've already banked, let's say 70 or 80% is in your pocket. So that's like a rule of thumb how to trade. Then everyone says to me, Ron, well, what do you do? I'm telling you the honest truth. Normally I close the entire trades, but if I have time, I go to 80% takeout and leave 20% running. But you figure out what's best for you. Everybody's different, okay? And NSC crude oil is just inside here. Not good to scalp. Let's wait for it to develop, okay? And gold was a nice little setup. If I took that sell, okay, I didn't, but if I did, let's say I sold in here, this is how I would have put, so you guys get to know how I trade. If I say, guys, I'm selling right here, I'm going to place this kind of box, okay? You guys should know about this. And then this is my stop loss. And I might say, guys, I'm going to place my stop loss above these wicks. I might say, I'm going to place my stop loss above the entire structure. So that's my stop loss. So if the trade comes back in, like if I go in a sell and then it starts coming back up green, I'm in drawdown, but I'm still in the trade. I just don't want it to come and break out here and then start to go up there. I'm only giving it this maximum room to come back maybe up here and another seller comes in and absorbs it and pushes it back down. But you got to always sometimes trade with a stop loss, like you have to. Sometimes we get lucky. We take a trade and it goes directly right into profit. If that's the case and we didn't even get in drawdown, then what we do is as it goes down, we now reduce our risk by taking the stop loss and bringing it down smaller to essentially where you want to be, break even. Then we've got no risk in the trade. We've got no like anxiety, you know, when traders get anxiety when they're in the trade. Now you're in pure profit, and now it's just to manage it while you're in profit. But you can't lose any money. Worst case scenario is if it comes back up and you don't do anything down here, it's a BE, it's a break even. You didn't win, you didn't lose. That's why we give you the 3 rules for you to decide what you do in the trade. You are your own trade manager. At the end of the day, you're your own banker. You need to do your finances. I can't do that for me. I got to manage mine. It's enough headaches as it is. But Arona, can you explain how to leave a runner? Do you have multiple? Arona, good question. Okay, so either Arona, if I have multiple trades, I could close. Let's say I open up 3 cells, for example, and maybe Arona, I close 2 of them in profit, and I leave the 1 open, and then I got the 1 runner. But I don't normally do it like that. I do it with, let's say, 1 trade, let's say 1 lot size, okay? So if I take this gold trade with I'm just using an example, Arona, a standard lot, 1.0, $10 a pip, and then it ran down 20 pips, I'm in profit $200, right? 20 pips, standard lot, 200. Now what I want to do is, maybe I want to close, I go to my MT4, MT5, where it says 1.0, on the position size, I modify it. I'll go in where it says 1.0 and I modify it to a 0.5 and then I close it. So what that will do is it will close a half lot size. It will cash out $100 and then it will leave 100 still running, a half lot still running in the market. And then that one I can also put with a break even. So that's why sometimes, guys, I use a little bit larger lot sizing when I trade, like a standard lot, a double lot. And then when it goes into profit, like maybe 10, 20, 30 pips, I'll close out a certain percentage. Normally I close out 80%. So if I did that with this example, standard lot size, drop 20 pips, I'm up $200. I close out, I go to modify the 1.0, I put Arona 0.8 and close out. It closes out 80% of the trade. I cash out $160 and then it leaves a 0.2 $40 running in the market. Okay, does that make sense? That's how to scale out and keep some runners. But if you have multiple positions, you can close some multiples. You can do that same strategy with the multiples. But it's kind of, if you don't have a trade manager or hotkeys, you got to go individually and do all those. So that's why I like to do it with one size, and then it's faster. So that's, guys, does that make sense? Did I explain that properly, or did I confuse you guys? It's all done with your trade manager, where you can modify it when you're going to close out a trade. Mobile trading. Yeah, I'm a mobile trader, guys. I don't know. I scalp everywhere, okay? I'm going to make this clear. I scalp everywhere. If I'm in the grocery store, if you see me in the grocery market, you will see me scalping on my phone. If you see me going picking up my kids at school, even the teachers, principals, they all see me. I'm scalping on my phone. I don't want to say this, but sometimes when I'm driving in my car, I'm scalping in the car. I'm scalping everywhere. Okay, that's what a scalper is. Okay, so I always got my mobile phone on me, and I'm always scalping. But that's what it is. I don't recommend that unless you have a little bit of experience. Guys, do you guys have any questions about anything tonight? Gold came down to that green box. Okay, so number one, if you're in a sell, okay, you got to do something. Okay, so remember the rules. Either break even, scale out some profit, or do the partials, what we just talked about. Trev Beats, why is it better to trade futures? Commissions, spreads, Trev Beats. Future trading doesn't have spreads, so that's an advantage. There is some good prop firms, guys, for futures. Apex is a good one. USOIL right now is just consolidating. We got green, red, green still inside this box. Let's let crude oil still develop over here. Joel, good question. When out and about, do I reduce the lot size? Yes, yeah. So when I'm at my trade station, like where I am right now, I'm more focused, Joel. Then I trade with my normal lot sizing. But like I said, if I'm at the grocery store and I'm scalping, I'm going to reduce my size. I'll maybe be like a 0.2 as opposed to a standard or a double lot, unless it's real nice trading volume and I love it and it's like 10, 20 pips in and out. But normally, if I'm not 100% focused right at where I am right now, then yes, I reduce the lot size. My goal is when I get in the grocery store, I want to I want to pay for the groceries. I was just going to say that, Joel. So if I'm going to the grocery store and I'm going to spend $100 on groceries, while I'm picking out the groceries, I want to scalp and make $100 in there. I wish they had like an app where we can scalp, and if we make $100 off of empty, I can just scan it, and it will just come right out of my brokerage account and pay for groceries or pay for gas. You'd probably see me just sitting at the gas station, just scalping in the car until I make $100, and then I fill up the car. That's something, guys. Maybe we should do that for the future. I'm joking. What if you lose? Is that what I'm reading? What if you lose? If I lose, I lose. But you got to have good risk management, Archie. Okay? So I'm not over leveraging. I'm not risking everything. But there is days when, yes, you do lose. And not every day is a winning day in the markets. Okay, and you see on Bookmap how everything is breaking down. Okay, so it came down lower low, lower high, lower low, consolidated below the VWAP, then it continued to break down, and we're continuing maybe to push down. Okay, so now look at we're trading in that green box. So this is where Gold came down at 815, where it came down, back up, came down, back up, and then it closed above here. And then that's where we had that push to the upside. So it's coming down here again. This purple line, that's our low of the day, 2021 and a quarter down here. That's our low of the day. We tapped right here at 6:30 p.m. Eastern. So what's going to happen now? Are they going to close gold down in here? Is it going to come back up? If it comes back up, and maybe let's look for it to maybe consolidate where 50% of that red candle and maybe like above here. If it can maybe consolidate in here and pick up liquidity, maybe we might be looking for maybe a potential buy, maybe like above here, hold it, and then maybe it comes back up to here. That could be a possibility. Also, maybe it gets rejected and it's a bear flag. Then maybe it flags in here and then it will continue to dump down to the low of the day and maybe drop down further. Okay, so gold is at an interesting area in here. We'll continue to watch it. Oil is just, it's not good right now, but we got to continue watching it. Green, red, green, red. It is ascending. You can see like the trend line. If we put one right here, it is pushing up. It is ascending, and then maybe we will break out of here and come bullish above here. Okay, so look at gold, kind of like a triple bottom right here and right here at those wicks. It came down exactly, came down and back up. Now it's like a bullish hammer candle. It's going to close in 60 seconds. So we're going to see if it can push out of here or maybe it will come back down. But as a seller, what I was saying, you guys have to do something in this green box. Something has to be done. You could go down to a break even. You could close your entire trade down there, or you can scale out what we said, take partials. Okay, so that's why I go over this 10 times on every single call, because I want to make sure we're clear on this, because this is where sometimes it pulls back. But depending where you sold, if you sold like up here, you're going to get pullbacks. But then if we can stay below this structure, like draw a red box right there, maybe if we stay below there, you're still okay. You can still maybe hold this sell. Maybe it's just going to be a small pullback and then they continue dumping it down. Okay, so maybe we'll put our consolidation right up to there. Is anybody in a gold trade right now? It really helps me, guys, to know. If you guys are selling, let me know. If someone is buying, let me know. And then I can kind of give you analysis on both sides of what's going on. Because there's going to be sellers and there's going to be buyers. Unfortunately, everyone on this call, sometimes when I'm selling, you guys are buying. Sometimes when you guys are buying, I'm selling. You know, that's life. That's trading. There's always going to be someone on the other side. So even you guys right now, someone might be selling and some of you guys might be buying. And then there's others that are just on the sidelines and we're just talking and we're just speculating right now. Okay, I see DJ T-Benz, you're in buys. March stores, you're buying. Okay, so just careful because we have this big red candle, and remember 50% of it's kind of like right here. We kind of got to close, get green volume closing above 50% of this red bar in order to keep pushing, because it could just be a small pullback and then the sellers continue to push this thing down. Big exciting weekend in sports, guys. NFL football Saturday and Sunday. Big games, big games. I got love for Detroit Lions and the Buffalo Bills. I'm a big Cowboys fan, but they're a big disappointment. I was hoping that they would fire Coach McCarthy and get Bill Belichick, the GOAT, in there, but that's not happening. So I got love for Detroit and Buffalo. They're my next teams. I live right in between both of those. I might go to the Detroit Lions Tampa game. UFC guys in Toronto, Strickland against Duplessis, big one. My boy, guys, give him some love. Malcolm Gordon, he's from London, Ontario, right here where we are. He's on the early prelims at 6:30. He's fighting Trig. He's right over here. Trains at Adrenaline in London. So we're going to give him some love. Strickland is crazy. Did you guys watch him? What he was saying? Oh my God, that guy has got no filter on his mouth. he, he is crazy. What he was saying to those reporters. He's a wild man. He is a wild man. He went to the Bass Pro Shops in Toronto trying to buy guns and knives, and they wouldn't let him. He's a nutcase, but tough guy. Sorry guys, SST we talk stocks, we talk securities, we talk forex, we talk sports, we talk life here. We talk about everything. There's a little bit for everybody here. Stephen, what's my take on oil? Is it going up or down? Currently, Stephen, we're just in this consolidation right now. It's hard to say right now. It is building off of this bottom right here, this hourly support here. It is building, but coming from the high of the day, it is pushing down. It rotated right back up with a lower high. They pushed it right back down. It could come and then sell back down. So, Stephen, it's really hard to say right now. Right now, especially with how it's trading in here. Again, Stephen, we just got to be a little bit more patient to see, will we get some green volume maybe closing above here, or are they going to continue to push it down in here? So it's a tough call, but it's pushing from the bottom, but we still got to respect the sellers above us. Sad times for Cowboy fans, man, just horrible, just horrible. What like you're 8-0 at home. You got the home field advantage, and you came out flat like that. That's coaching. The coaches got to do their job. McCarthy, I'm sorry. He was in Green Bay. He had Aaron Rodgers in his prime, 9 years, and they only got one Super Bowl. So that shows you something. He's not doing it in Dallas. I hope that they go after Bill Belichick for one season. Archie, how to trade all-time high markets, how to analyze. Depends what security you're doing, but do psychological levels. Archie, like what am I talking about every single day on these calls? The quarter increments. Okay, so like let's say gold, for example, 2150 is the all-time high. Where it goes, if it goes any higher, how do we know where it will go? You got to do your 2175, 2200, 2225, 2250. If NASDAQ is going all-time highs, 17,000, go 17,000, either 100 pip increments, but you got to go find those psychological numbers, those transaction locations. And that's how you go about that. When we can't look at anything to the left of the chart because it's never ever been there, you're trading a naked chart. So you got to go after your psychological levels. That's okay, Archie. I know that's important. So for everybody, when securities go to all-time highs, look for those psychological levels. Just like how we show you right here, those 50% levels, psychological quarter theories. You got it. Go from there. You see how it works like when we're trading live? Why will it not work in the futures when it goes there? Because the banks are waiting to transact at those all-time high areas as well. Okay, so you and I as retailers, we got to know these things. So good questions. Those are great questions. But that's how I would go about it. Like Bitcoin, for example. Bitcoin's all-time high was 69,000. If it goes back up there and it breaks out all-time highs, where is it going to go? Some people are saying 100,000, 200,000. Some people are saying a million. You can't go to a million. You got to go to the next logical level. We got to go to 75,000. We got to go maybe to 100,000, then to 125. You can't go from 69,000 to 1 million. So like you gotta, again, realistic psychological levels, quarter, 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 Remember what we were talking about. Why? Do you guys know why I talk about those psychological numbers? Because markets are an auction, and they transact where there's efficiency. They need efficient transactions. More transactions makes it more efficient. So if I'm selling you guys this Gatorade G0, right? If I'm trading this, or if I'm selling this to you, not trading it, but if I'm selling this to you, I probably will sell it to more people if I sell it for $2. $2, two singles, or a toonie or a loony here in Canada. I bet you I could sell 10 of these Gatorades for $2 on this call right now with 10 of you guys, and I make $20 and I give you guys 10 Gatorades. But if I put the price $1.82, I'm probably not going to get a lot of people transacting, because maybe someone doesn't have exact change, $1.82. Maybe I don't have change. If you give me $2, I don't have 18 cents to give you. We're not going to make a efficient transaction, but $2 is easy for everybody. So that's the whole concept and the principles of psychological numbers. Okay, hopefully that analogy helps make more sense. Okay, look at gold. Kind of like a double bottom holding inside here. So let's see what will happen maybe at this red box. 50% of this red candle is, let's bring this red box to maybe 50% right there, like right around there. And let's see if we start to close above here. Franco, NASDAQ just hit 17,050. Yeah, that's big tech. That's big tech. NVIDIA, all-time highs. AMD pushing the semiconductors. So that's NASDAQ. We'll follow through with it tomorrow, guys. NASDAQ all-time high, yeah. Well, NVIDIA's pushing big time. NVIDIA's all-time highs. Semiconductors. Cal, what software are we using? This is called Bookmap up here. See Bookmap? This is live liquidity futures feed. It uses rhythmic data, giving us all the futures. So we're looking at gold, NQ, this is NASDAQ, YM is US30, ES is S&P, and we also have crude oil. If you guys want to use the link in our description, you guys can use this for free, but the only free security is Bitcoin. So Bitcoin is exciting, but you get to learn how to look at live liquidity with Bitcoin. So Bitcoin will have a heat map. It will show where the big players are trading. It will have offers. It will have bids. You can use this cumulative volume delta indicator, a VWAP, everything we have here. But then if you want this, you got to pay for this rhythmic data. And then you have to pay for this, unfortunately. But all live liquidity platforms you have to pay for. But it's nice that they give you a free demo with Bitcoin, and you can watch that. Joel, look at all the orders waiting if Bitcoin hits zero. Oh, don't tell me that. No, I don't think it will ever be zero. Rodney, what exercise can you do to let your winning trades run and not cut them too fast? Rodney, is just allow the setup to take place. You know, like maybe don't just scalp like for small moves. Allow the trade to develop. Give it enough room to breathe, Rodney, where you're not over leveraging your account. You're giving it a healthy stop loss, but you're allowing the trade to develop and let it build and let it go. Maybe just try that tomorrow. Like practice that, Rodney, with a very small size, but maybe the psychology of allowing a trade to breathe more will allow it to get to a bigger profit. And then once it starts moving, then you can start to reduce your risk by bringing your stop loss to. But I know it's hard when you go right into profit. We're excited and we want to just take all the profit. But try that exercise tomorrow, Rodney, or maybe like the start of next week, and just test out that theory. Give it some room to breathe and allow the trade to develop. And have a specific like pips in mind what you're happy with to, like, I don't know if you're closing too early at 5 pips, 10 pips. or 15, but maybe you want to allow it to move to 30 or 50. I don't know. But that's an exercise. I used to do that as well. I used to just allow trades. I would look for those A plus setups. I would give it enough room to breathe so that it would be more than 10 pips. And then it would go to 30. And then I learned how to hold it. But you got to hold those where it goes up 20. It might pull back to 10. It might go back to break even. It might build a base, but then it will go up to 30. So yeah, you're a 5-10 pip trader. So just try that, Rodney. Give it a little bit more room to breathe maybe tomorrow, and just know that you're practicing that for tomorrow or the next day. Okay, and then see if it helps. And then we'll have this conversation next week. We'll see if it helps, and maybe just a little tweak of an exercise like that can change. And then you'll learn how to hold trades longer than more than 5-10 pips, and that'll also help you if you take a loss. You'll retain your profits, and you'll make more money in the markets even while taking smaller losses. So just try that. You got nothing to lose, and that goes for everybody. When you're trying new concepts, try something new, but scale down your account while you're learning, and then see if it will help you. The markets are open 5 days a week, every single day. They're not going anywhere. So if you want to practice a new strategy, you're learning a new indicator, you're learning something, then just take your time and learn, but reduce. Even if you have to go on a demo account and you don't want to trade your real account, go on a demo tomorrow, Rodney. Try it with a demo account, but just keep in mind the psychology that you're looking for the bigger move and you're holding it as if it's a real account. Like, just understand that. Teach yourself that even if it's a demo, it's still a real account. Like, I'm just saying that if you don't want to trade with your real money. Nitish, I love when people say, please answer my question. Like, I'm looking to see what it is. I got to scroll up. Okay, I'm reading. How can I start Forex trading? I've done practice and demo, so I should go for prop firms or start with real money with small capital. Nitish, that is up to you, brother. That's up to you. I don't know how much capital you have. I don't know what you want to do. My recommendation is, if you can trade a prop firm, trade a prop firm. But trade it properly. If you want to trade with your real account, trade with your real account. But I don't know how much capital you have. I don't know what your goals are. I have no idea. Like, I haven't met you. I haven't talked with you. So I can't come up with a trading plan just by reading one question. It takes time. You got to know what you want to do. But what I recommend is do a prop firm. Okay, if you can pass a prop firm, then you know that you can do really well as a trader with your real money. But if you can't pass a prop firm, even if you have your real money, it's not going to do anything. You're probably going to lose your real money in the markets. I recommend, if you've already learned how to do with a demo, start off with a prop firm. I think that's best. And then see if you can get the 5% in the phase 1 or 8%, whatever it is, and then see if you can pass phase 2. And then go from there. And if you get confidence doing it with a prop firm, then you'll have the confidence to do it with your real money account. But your mindset, your psychology needs to be there. That goes for everybody on the call. Yeah, is it true Asian session is slower than London? Yes, absolutely. You can see how slow we're moving right now. So London picks up volume, but the best volume is New York by far, 100%. New York is the big daddy. Okay, look at gold now. So we're barcoding. It's very clear. Green, red, green, red, green. See where I placed the red box? I conveniently placed it 50% of that red candle. You see how we're not breaking above it? But the buyers are still accumulating and sellers are still accumulating. So this could go both ways. It could break out bullish, or it could sell down in here. Okay, so we're still waiting. We got 3 minutes to go on this candle. It's 10:52. We have about another 8 minutes to go, and then we're going to get a new hourly candle come up at 11 o'clock. Crude oil is really consolidated in here, so I would avoid crude right now. And you can see the cumulative volume delta, Joel. Yeah, it's reducing. It might come down to balance itself out at 0 again, going into 11 p.m. Can you explain about how to use daily high and low for day of entry? Depending on how the previous days are moving, but technically what some traders look for is a sweep of the low or a sweep of the high. So this is what they look for. If gold, like see the purple line, that's our low of the day here, 2021. If it sells off and comes down red, a lot of traders look for the sweep of the low and to grab that liquidity and come back up and maybe close and retest this and then go back up. So that's a style that a lot of traders look for. They look to sweep the low, take out the liquidity, and then get into a buy and come back up. It's the same analogy if we sweep the high up here. There's our purple high of the day. So if the buyers were to bring it up through here, they take out the high liquidity, and then it comes back down and closes below here, they'll look to sell the high of the day where they sweep the high. That's one style of trading, but that doesn't always happen, because sometimes if it takes out the high and then it respects this area and then this turns into a block of bids, then it's going for a new daily high. So you have to be careful, but that's naturally how daily high breakout and breakdown traders trade, is they look for sweep of the high or sweep of the low, and then if it comes back in and picks up that liquidity, it's a liquidity sweep. They came out, they took out all the pending orders, they grabbed the money down there, and they want to reverse the market and go in opposite direction. Okay, so hopefully that type of explanation helps out, but every situation is different. I can't just say that and then someone on the call is going to expect that to happen every single day. It all is in context of how the market is moving. Okay, so don't just think every single day if we take out the low, we're going to go automatically in a buy and go into profit. Okay, you got to understand that it's all the context of how everything is trading. But normally, that's where liquidity sweeps happen at the higher time frame breakouts. That's where a lot of traders get caught in there. Guys, I just want to show you like a signal we had. Like we've got a signal channel, guys. Also, if our membership has everything with the education, all of the Zooms, signals, but there is just, if you want signals alone for $1 a day, this is typically what it is. So this was kind of a gold signal that came out today. This is the charts. Okay, so what we look for is a gold buy above here, 2015, and again, we look for the level and we look for volume to close above. This big green bar closed above, and then you see how it came back to retest. So if you bought anywhere in here, we suggest having the stop loss a little lower. We give on the signals 50 pip stop loss to take a potential 100 pip reward for a 1 to 2. You don't necessarily have to use 50. You can manage your own. Some traders trade with 25, 20. Some traders trade just structure. Maybe we'll place it below the wicks. Again, depends on what you're doing. But this thing held here and it retraced up for 77 pips, coming trading into here. So like see what you can do with a standard lot size from 2015 2025, a $10 move, 100 pips, $1,000. And just by following here, 2015 buying, having your stop loss. Rodney, this is for you, Rodney. Keeping your stop loss a little bigger, letting the play develop, and you can get maybe a possible 100 pip runner. Okay, it's not always going to happen, but Rodney, if we can learn how to hold a little longer, maybe you'll get the confidence to hold trades longer. You don't always have to scalp for just 10 pips. Okay, so you see guys how we're barcoding. Green, red, green, red. Okay, so this is where we have to be patient as traders. I know this is tough, but you got to learn this. This happens in all sessions, not just Tokyo. This could be London, this could be New York, this could be Wall Street, this could be Power Hour, this could be any session, okay? You got to learn, okay? But let's just keep in mind, it's not going to just trade in here all night. Eventually, gold is going to break either bullish up here or it's going to break down bearish and try for the low of the day. It's not going to stay inside this little zone all night. So I keep telling myself that when I trade, and that keeps me patient, that keeps me disciplined, and then I know I can eat, I can wait, I can make money if I'm patient. All of us, we can all make money if we're patient. Okay, the markets, it's their platform giving money from the impatient traders to the patient traders. So us as snipers, we're patient, we're disciplined, we're aggressive when we need to be, but discipline and patience will get you a long way in trading. With proper risk management, you will be well ahead of the game. If I learned this from day one, I'm telling you guys the honest truth. If somebody taught me that from my first day of trading or my first couple years of trading, my journey would be completely different. Okay, so I want you guys to all know that being disciplined, being patient can help you. Guys, NASDAQ, what is NASDAQ doing? Let's look at NASDAQ. You guys are going crazy for NASDAQ. Let's take a look. Yeah, it's breaking all-time highs. Okay, so like, I know you're getting excited, yo-yo. You're getting excited. If you want, try buying all-time highs. And you're buying the highs, and then you might get absorbed by a big market maker and they take you down for a ride. So you have to be very careful. I can see right now a wick, a wick, a wick, and a wick. So this could be a double top situation right now, guys. If you're looking for a setup right now, this is your red box. Okay, right there. Let's find maybe a good area to maybe sell below here. Okay, again, this is very, very similar to the double top of gold that we just had. Maybe consolidate this area and get ready. Here's 11 o'clock. If this thing sells down and closes below, I'm not taking this trade, but I'm just kind of giving you guys maybe just a potential setup. You'll look for a sell below there. If it starts moving down here, what we're going to target is to take out those bodies, maybe take out that wick. There's 50% of that green candle. See what I mean, guys? We're on NASDAQ now, and there's the same rule. There it is. That big green candle right here at 9:45, there's half of it. That's when it came retraced down right to half, and then it had that move coming back up. So if it kind of closes below here, we're going to target there. If it can break that low, maybe it comes down to there. Okay, and then if we sell down in here, stop loss could be above the wicks or above this box. Okay, it's not developed yet. You see, it's a bullish ignited candle starting at 11. It might continue to go up, but that could be where I'm going to look to sell if it ever gets down there. So what I'll do is I'll place an alert, right click the red line, add an alert, yes, create it. So now you'll see a little clock right here. Where is it? There it is, that little red clock. So I've created an alert at this red line. I have TradingView on my mobile, and I've got MT4, MT5 on my mobile. So when I get off this call and I get out of here, I will get an alert. I don't have to be where I am right now. If I go outside, whatever I do, I'll get an alert at this level. Then what I do is I watch and see for maybe a red bar closing below here, maybe retesting this, and then I go for that sell. And I measure the move from right there to the red line, so I know exactly ahead of time what I'm looking for. I'm looking for maybe 8.5, 10 pips. If it breaks, 10 pips. If it comes down there, I'm looking for 13, 15 pips. Okay, so you see now, look at the 1 hour. It got rejected. It opened green. They came up again in the red box. Faked out the buyers, and now it's coming down. Let's see if it's going to maybe close below here, or if it's going to maybe be an impulse coming down. Might come back up, but this is what you got to do. You got to wait for it to come down there. Look at this. Okay, you see how the strength RSI is decreasing? The strength is decreasing. If they go one more time up here, I think they're going to come out and grab the pending orders up here. That's just my opinion. Okay, like up here, They might come up here. If it comes up one more time, they're going to come up to sweep the high liquidity, come up, grab all that money up there, and then reverse it down. That's a possible theory. Okay? And gold too. Again, gold came up to our red box and back down red. So it's transacting at 50% of that volume and still not pushing above there. Okay? Does that help, guys, with NASDAQ? Yo-yo. Does that help you? Okay? And then if it goes all-time high territory, go look for your psychological levels and your quarter pip moves. Natish, I read your question, but there's others that have questions on the call too. So I can't just focus on you the entire night. Okay? Look at now, guys. 2 minutes to go and we're ready to possibly break. If I want to go to the 1 minutes, I can scalp on the 1 minutes. I can watch the individual 1 minute bars right now and watch and see if a 1 minute candle will close below there. 45 seconds to go. It closed right there. I don't know if you guys can see it, but there's a tiny green candle right here opening. 50% of a 1 minute candle as well. Okay, so if it comes up, tests 50% of a 1 minute candle, just like we were talking about here. Okay, there it comes up green. Will it get rejected at 50% of that previous 1 minute bar with 20 seconds to go? It did. It came up, got rejected. Now it came down, back up. This thing is going to close in 10 seconds. And there it is. It's a shooting star bar right now. Let's see how it's going to close. Get ready, guys. I might take a quick sell. If I take a sell, I'm not going to be staying on the call longer. I got to get off this call. But there it is, the 1 minute candle breaking. Okay, the next one they gapped it down, so it's starting. So if you're looking at your 5 minutes, your 5 minute candle is impulsively breaking. If you don't want to enter right now, wait it out 45 seconds because our 5 minute candle is going to close in 40 seconds. Then maybe we could sell the next 5 minute candle, seeing if it will retest this area. But do you guys understand how I set this up? It was set up identical to gold. Look, there was the one top. There's your one top. There's your double top. There's your double top. This was that consolidated zone I had right there, right? And that was the sell on gold. Same situation, different security. Okay, but we need that volume to close below. Here we had the red bar close below. Do you guys understand what I mean? Okay, it's the same setup. Gold, yeah, dropping. Okay, so gold, you know, nothing, a 50% rule. 50%. See, they trapped the buyers to think it was going to go up, and then elevator coming down. See, that's why I said wait, guys, wait. Okay, see how it came down, and then look at where it closed. They brought it right back up and it closed in the box, and the next candle opened green again. So watch if they're going to grab some liquidity and then hammer it back down. If it continues to drive, they could continue go for some new all-time highs up there. Okay, so just be careful, guys. But that's it for me. I had a lot of fun with you guys this week. Guys, this is our YouTube. Okay, look at all of our webinars. Okay, all of our live trading sessions are here, everything we do, but there was webinars. This one is good. Types of trader sessions and use. This is one of my favorite ones. Psychology and mindset. This one was nothing but nuggets in here. Trading mindset. Why are you struggling as a trader? You guys are asking me 100 questions on here why you're struggling. Watch this webinar this weekend, and maybe you'll get your questions answered. If you want to learn all about wicks, wick analysis webinar. If you want to learn about brush up on support and resistance, here it is. If you want to learn about the bullish and the bearish family, we've got these ones right here. The entire bearish family webinar, the entire bullish family webinar. There's a lot of stuff in here. We got Josh time stamping these, so thank you to Josh. He's not on the call today, but thanks, shout out to Josh for putting timestamps on all of our lives and these. He's an amazing guy, so thank you for doing that. And this is that trade passing, guys, I was talking about, tradepassing.com. Here it is, 50% off. You can use that code first 50, and if you want to they work with these prop firms: Next Step Funded, Infinity, Fast Forex Funding, Cortana, Nova Funding. That's who they work with. If you were looking to get one pass, and please, guys, everybody on the call, pinned at the top of the YouTube is our free Telegram channel. Please, guys, join this so you don't get scammed and you know that this is legitimately us, because there is scammers messaging guys in our Discord and on Telegram taking money from people. We don't do that, guys. We're here to help. We don't take your money and promise you returns of 10x by Monday. So it's all BS. Don't give your money away to nobody. Question them. Ask them. You know what you do with these scammers? Ask them, what is Ronnie's favorite food for breakfast? Okay? And you guys know what my favorite food for breakfast is, and hopefully they'll tell you what it is. Okay? If they can't tell you what my favorite food is, then they're a scammer. Okay? And Ronnie likes his pancakes with syrup. Okay? But guys, I had a lot of fun this week in Tokyo, but I'm burnt out. Oh, look at NASDAQ. Okay, so it came up green. Get ready, guys. Could be a possible, got rejected for maybe a possible sell opportunity here, guys. So I'll let you guys play it out. And Halat, you made your biggest profit today. Amazing, bro. Amazing. You know, Halat, that made my night. I love that. Now the scammers know my favorite breakfast. I'll say something different. Something different. Maybe I'm setting up the scammers to say pancakes, and I got something else for them. But guys, I had a pleasure. Hopefully you guys learned something new this week. Thank you for all the subscribers. Thank you for the likes. Thank you for sharing our channel too in your trading communities. That's very nice of you guys. Thank you, guys. But gold could be breaking down to that daily low, and we might see NASDAQ breaking down as well, guys. So if you're going to continue trading, have fun, guys. But I'm done for this week. Next week, make note, guys, we're going to be back in New York, 1 p.m. Eastern, and we're going to go till about 3 to 3:15 p.m. Eastern, and then I got to go pick up my kids. But we'll be back in New York now, okay? So thank you, guys. I appreciate all of you guys. God bless everyone. Stay safe this weekend. Have a blessed weekend, and let's continue learning and earning together. And have a nice night, guys. Thank you guys so much from everyone at SST. We appreciate all of you guys. You guys on Zoom, get some rest. Shahab will see you guys in London. Big Dave will be there in Wall Street. MPK Post. And all of you guys have a good day trading. Proper risk management Fridays. Juma Mubarak to everybody. Good Friday. Thank you, guys. God bless. Have a good night.
Hey guys, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
Ping in on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, Hankotrade. With spreads as low as 0 pips and leverage up to 500x, Hankotrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using Hankotrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. Hankotrade.